Everyone, we'll be doing our presentation on Costco. We'll go over the buy and don't buy perspective, starting with an executive summary, where we'll go over the company and industry overview and some key decision points. Then we'll go over the external analysis, where we'll show a pestle analysis and use Porter's five forces. Then we'll go over the internal analysis, where we'll show a SWOT analysis, the organizational culture, and the financials. And then we'll end with a strategic recommendation.
Before we begin, here's our team behind this Costco case study: Eliana, Morgan, and Bryce.
So for the executive summary, I'm going to go over company overview, industry overview, and key decision points, and this is for the buy perspective. So Costco was founded in 1983 in Seattle, Washington, and it is currently the third largest retailer in the world. As of 2021, it operated 828 warehouses worldwide and generated $196 billion in annual revenue. Its business model is unique because it's heavily driven by membership fees. Costco has over 114 million cardholders, and those fees make up about 70% of its operating profit. What makes this model so powerful is Costco's loyalty. Membership renewal rates are above 90% in the US and Canada, which gives it consistent recurring income. For industry overview, Costco competes in the warehouse club and the supercenter industry. The main direct competitors are Sam's Club, which is owned by Walmart, and BJ's Wholesale Club. But despite this competition, Costco has a clear edge. Its average sales per warehouse are $236 million, more than double Sam's Club's $103 million. So, for key decision points, Costco's strong membership model, high financial performance, global expansion potential, and high customer loyalty make it a sustainable long term investment. Its ability to outperform competitors in sales per warehouse and its powerful Kirkland signature brand reinforces why Costco continues to thrive even in a competitive retail environment. So now let's look at the executive summary for the don't buy perspective. So again, Costco is the third largest global retailer, but it's behind Walmart and Amazon. And another problem is that a big part of its success comes from membership fees, which make up around 70% of operating profit. This heavy reliance means that if renewal rates were to ever slip, then Costco's profitability would probably take a major hit. Looking at industry overview, Costco operates in a very competitive space, so its direct rivals are Sam's Club and BJ's, but it also competes against companies like Amazon, Walmart, and Target. Rivalry in this industry is intense, and Costco does face some challenges. So, for example, it lags behind many of these competitors when it comes to the online shopping and digital innovation. For key decision points, while Costco has strong brand loyalty, it does also face overdependence on membership fees and intensifying competition from both digital and physical retailers. So, from this point of view, buying Costco stock could be a risky move given the pressures it faces in such a competitive industry. With that, I'll now move on to the external environment analysis to dig deeper into the opportunities and threats shaping Costco's position. Now let's take a look at Costco's external environment using the pestle analysis. We'll start with the buy perspective. So, starting with political, Costco benefits from operating in a fairly favorable US retail environment. Its global expansion is also supported by trade agreements. Next is economic environment. Costco's business model shines during inflationary times. So, when consumers are looking to save money, Costco's bulk sales and capped markups offer real value. Looking at social factors, the buy side is very strong here. Shoppers love bulk savings, and its membership renewal rates are over 90%, which shows lots of loyalty. Costco also has a treasure hunt experience, which are like surprise limited time products, and this really keeps customers really excited and wanting to come back. Now for technology, Costco is making progress in e-commerce. It partners with Instacart for delivery, it runs Costco Travels, and it's expanded Costco.com to multiple countries. Now, for environmental factors, Costco is investing in solar panels and sourcing products more sustainably, and this appeals to environmentally conscious shoppers and strengthens its brand. Finally, for legal factors, Costco's relatively good treatment of employees compared to its competitors helps reduce legal and union pressures. So, as you can see, Costco has many opportunities that make it attractive for a buy recommendation, particularly its value model, its strong membership loyalty, and its sustainability initiatives. Now, moving on to the don't buy perspective, starting with political factors, trade policies and tariffs are a concern since Costco relies on global suppliers for many of its goods. Next is economic environment. Something like a global recession could hit Costco pretty hard. Customers may still buy essentials, but they'll probably cut back on higher margin discretionary items like electronics or jewelry. And looking at social factors, younger consumers are shifting towards online shopping. Also, Costco's membership model can be a barrier because not everybody wants to pay an annual fee just for the right to shop there. Now, for technology, Costco still lags behind Walmart and especially Amazon in digital innovation. If it doesn't keep investing in online platforms, it risks losing younger and more tech oriented customers. For environmental factors, sustainability initiatives do come with costs, and if new laws demand higher sustainability standards, Costco may need to invest heavily to stay compliant. And finally, legal factors. There's always the risk of labor lawsuits and regulatory changes, and it especially gets more complicated as Costco expands into new countries where labor and environmental laws can be very different. So when we look at Pastel through the don't buy perspective, we see Costco is exposed to economic downturns that could potentially shrink discretionary spending and also global uncertainties like trade policies and currency shifts. And then on top of all of that, it does lag behind major competitors in digital growth. Now let's look at Porter's five forces and how it affects Costco's position from the buy perspective. So, first we have competitive rivalry. Costco actually performs well against its rivals. Its average sales per warehouse are $236 million, which more than doubles Sam's Club's $103 million. Plus, its private label Kirkland Signature brand, which has generated $59 billion in sales, creates differentiation. Next, we have threat of new entry. Starting a warehouse club is extremely difficult. You need a lot of things like huge capital, warehouses, supplier relationships, and Costco is protected here since it already dominates this alongside with Sam's and BJ's. And it's also not easy for new companies to enter the space at this scale. Third is supplier power. Costco has massive buying power. It negotiates favorable terms and actually often sells goods before it even has to pay its suppliers, which strengthens its cash flow. Its Kirkland private label also reduces dependence on outside brands. And fourth, we have customer power. Costco's renewal rates are above 90% in the US and Canada, and once members pay for a card, they want to get their money's worth, which keeps them loyal and keeps them coming back. And finally, we have threat of substitutes. Customers don't have to shop at Costco, they really could go anywhere else. But Costco creates a unique value proposition through its membership perks and treasure hunt shopping experience. People really like finding unexpected deals and they rely on Costco for bulk savings. Also, Kirkland products build loyalty because customers can't really get them anywhere else. So, overall, the buy side sees Costco's strong sales per warehouse, supplier leverage, and loyal membership base as powerful competitive advantages. Now we'll move on to the don't buy perspective. So, starting with competitive rivals, Costco faces intense competition from retail giants like Sam's Club, BJ's, Walmart, Target, and Amazon. You have Amazon that dominates e commerce, Walmart with its low prices, and Target, which younger generations love. So, the competition is pretty fierce. Next is threat of new entrants. While Costco might not have to worry about direct new entrants, local or niche competitors can still grab market share in specific categories. Also, digital retailers can come in and compete. Like with Amazon, by combining subscriptions like Prime with grocery delivery, they've already created a new type of substitute that threatens Costco's model. Third, supplier power. Costco's low markup policy could strain relationships with suppliers. It's also exposed to global supply chain issues. For example, rising costs in things like meat, produce, or fuel could cut into margins. Fourth is customer power. In theory, customers can cancel at any time. So if the competition has better promotions, it could lure Costco customers away, and some may even question the value of paying for a membership if they can get low prices elsewhere. Also, in a downturn, households could see the membership as a luxury expense and drop it. And finally, we have threat of substitutes. Substitutes are really only getting stronger. Online shopping through Amazon Fresh or Walmart.com is incredibly convenient, and many retail chains let customers save money without paying a membership fee. So, overall, the don't buy perspective points to intense rivalry, the growth of substitutes, and the risk of membership fatigue as potential weaknesses.
Beginning with the internal SWOT analysis from the buy perspective, starting with the strengths. The first being ultra low prices through cost control. Costco keeps prices low by minimizing markups and focusing on operational efficiency. This commitment to value is a key driver of customer loyalty and competitive advantage. The second strength being efficient operations, which drive high sales per warehouse. With high annual sales per warehouse of $236 million and low overhead, Costco's execution of streamlined operations ensures customers benefit from quick product turnover, fresh inventory, and strong in stock positions. The third strength being simple, high volume merchandising. By offering a limited selection of high turnover products, Costco keeps inventory fresh and prices low, enhancing the shopping experience through simplicity and savings. The fourth, loyal membership models. Recurring revenue and customer loyalty are aligned by the membership based model from Costco. In 2021, there were more than 111 million Costco cardholders and 3.9 billion in membership fees, maintaining client support while sustaining its low price strategy. Moving on to weaknesses. The first being limited variety from focused merchandising strategy. Costco emphasizes efficiency over selection, meaning customers may not find as many brand or product options. Typical supermarkets stock around 40,000 items, whereas Costco has a selection of approximately 3,700 items in their warehouses. The second weakness being bulk only models, which limit accessibility. The focus on bulk purchasing creates savings for customers but may limit accessibility for smaller households or casual shoppers. The third being membership barriers to entry. Requiring shoppers to pay an annual fee is central to Costco's revenue model, but it also creates a barrier for price sensitive or infrequent customers. Moving on to opportunities, e commerce expansion. In 2021, e commerce only made up 7% of total net sales and has now grown 44% year over year, showcasing Costco's shift towards serving customers beyond physical stores. The second opportunity, global market expansion. There are Costco warehouses in 13 different countries, bringing the company's value to a broader audience, improving member accessibility and convenience. The third opportunity, loyalty driven enhancements in member services. Costco's strategy is being on first name basis with employees and focuses on customer connections. They have a chance to use that loyalty to expand services or make the shopping experience for customers even better in the future. Now, moving on to threats. The first being competition from various retail models. Rivals like Amazon, Walmart, and Sam's Club offer broader selection, home delivery, and flexible pricing models, which challenge Costco's narrow margins and in person approach. The second threat, economic sensitivity to membership based strategy. In tough economic times, customers may question the value of paying membership fees, which can challenge the sustainability of Costco's strategy if it is not countered with compelling value. The third threat, shifts in consumer preferences. Trends towards smaller, more frequent purchases, such as digital convenience and tailored experiences, may reduce Costco's appeal, especially to younger or urban shoppers. Now, moving on to the internal SWOT analysis from the don't buy perspective, starting with the strengths. The first being membership only model. As Costco revolves around a paid membership model, it excludes non members, making it unappealing for occasional price sensitive shoppers. The second strength, bulk purchasing. While this could be effective for larger households, this bulk purchasing model does not align with all lifestyles, such as smaller households or those who prefer flexibility and variety. The third strength, efficiency prioritized over customer experience. Costco emphasizes functional store layouts designed for efficiency rather than experience. For customers who prefer a curated or comfortable shopping environment, the warehouse style experience may deter shoppers. Moving on to weaknesses. The first being limited product variety. Costco's strategy focuses on few product options per category to maintain efficiency. This can turn away consumers who value selection and brand variety. The second weakness, financial commitment upfront. Costco's mandatory annual membership fee filters out casual shoppers and those who are uncertain about the long term use. The third weakness, lack of personalized and digital engagement. Unlike Amazon, Costco has not embraced personalized shopping experiences or advantaged digital tools, missing an opportunity in an increasing data driven retail landscape. The opportunities, expanding e commerce removes entry barriers. As e commerce is growing rapidly, expanding online offerings, especially with limited access models, this could attract non members who want to try Costco without fully committing. The second opportunity, introducing flexible membership models. Costco could develop a tiered or trial based membership, making it more appealing to non committed Costco shoppers, improving conversions without entirely abandoning the membership model. Moving on to the threats, the first being disruption from flexible competitors. Competitors like Amazon or traditional grocery stores offer no fees, smaller quantities, and more variety. The second threat being shifting demographics and shopping habits. City dwellers and younger consumers may prefer smaller, more frequent shopping with limited storage space that they may have. The third threat, economic pressure on membership value. The need to pay upfront just for access into Costco may seem counterintuitive to some individuals. Now, shifting to the organizational culture from the buy perspective, culture of simplicity and modesty. Jim Sinegal was known for his modest leadership style, wearing Costco clothes, a basic name tag, and personally answering customer calls, even though he was Costco's co founder. Respect and equality. Costco is known for being on a first name basis with employees, showing respect for people at all levels of the company. Operational involvement from leadership. Jim Sinegal would visit 8 to 10 warehouses a day, observing everything from pricing to product placement, and he would ask managers challenging questions regarding Costco, using actual data and firsthand experience to make decisions based on the understanding of what's actually happening within Costco stores. Lastly, focus on employees. Jim Sinegal was well liked by his employees, and Costco's culture focuses primarily on employee satisfaction, which directly impacts customer experience and store efficiency. Looking at organizational culture from the don't buy perspective, customer flexibility does not always come from an employee driven culture. Costco puts a lot of focus on taking care of their employees, which is great internally for the company, but from a customer's point of view, it might mean fewer tailored experiences, such as trial memberships or store layouts. Strong internal culture may slow adaptability. Costco's values and leadership methods were shaped by Jim Sinegal's long and direct involvement with warehouse concepts. This may allow Costco to resist change, which can become a problem when retail trends, such as digital innovation, move quickly. Looking at the financial analysis from the buy perspective, first starting off with Costco has a strong revenue growth. In 2021, Costco reported $192.1 billion dollars in net sales and $6.7 billion dollars in operating income. Costco's revenue has grown from $89 billion dollars in 2011 to nearly $196 billion dollars in 2021, showing their steady long term growth driven by Costco's strategic execution. Next, Costco earns their profits effectively. Even with low prices, Costco earned $5 billion dollars in net income in 2021. Their ability to run efficiently and at scale allows them to stay profitable while passing savings to their customers. Additionally, Costco has high sales per warehouse. Each Costco warehouse averages around $236 million dollars in annual sales, which is more than double that of Sam's Club, showing how productive and efficient each Costco location is. Costco also has a scalable global model. With over 828 warehouses worldwide, Costco has proven it can scale its model across countries while also maintaining consistent operations and customer value. And lastly, Costco has reliable membership revenue. Memberships generated $3.9 billion dollars in revenue, supported by over 111 million cardholders.
So now I'm going to walk through the financial reasons why we're recommending a don't buy position on Costco, with point one being thin profit margins. So Costco operates with very thin profit margins. In 2021, merchandise costs made up almost 90% of net sales. This lean model means that there's very little room for mistakes. Any disruption, like supply chain issues, inflation, or changes in consumer demand, can immediately hurt earnings. For risk adverse investors, that uncertainty raises serious concerns about Costco's long term stability. High cost of expansion. So, Costco's growth strategy is heavily tied to building physical stores. From the year 2011 to 2021, their warehouse count jumped from 598 warehouses to 828. That required huge capital investments, but this focus on physical expansion also limits flexibility. If market conditions shift or customer preferences change, Costco may struggle to pivot quickly, and investors might see this as an issue as well. So, point three, Costco's narrow product assortment also creates limitations. Financially, this means they could be missing out on revenue opportunities from a broader customer base. While exclusively helps control costs, it also restricts appeal for consumers who want variety. And last is limited e commerce presence. Finally, Costco falls behind competitors in e commerce. While their online sales are growing, Their digital retail investment is nowhere near like Amazon. For customers who prioritize convenience, Costco's weaker online platform may push them to shop elsewhere. That's a red flag in today's market where digital sales are becoming increasingly critical. I'll be discussing the strategic recommendation, and our strategic recommendation is to buy Costco. And the reason why we want to buy Costco is pretty simple. So, first, Costco's membership and model creates steady, reliable cash flow since customers renew at rates above 90%. Second, their financial track record is consistently strong. Revenue and profits have been growing year after year. And finally, their cost advantage over competitors like Walmart and Sam's Club is what really pushes them past the edge and makes them very hard to beat. Altogether, this makes Costco a strong long term buy. So, why buy Costco? Well, here's the evidence behind our call. Costco currently has around 137 million members, and over 90% of them renew every year. That's pretty predictable recurring income that most retailers can only dream of. Second, Costco's not just about warehouses anymore. Their e commerce sales are up between 13 and 18% recently, which shows they're adapting to the digital shift and competing with Amazon online. Third, they're expanding globally. There's new warehouses in Asia and there's new warehouses in Europe, and it's helping Costco scale and tap into new markets. And finally, customer loyalty is hands down Costco's biggest strength. People believe in Costco's value and trust the brand, which gives them long term staying power. Now let's look at some of the major risks and rebuttals that Costco faces. So the first one we have is competition. Competition's a big one. Costco's up against big companies like Amazon, Walmart, and Sam's Club. These companies have strong online platforms, and they also have big customer bases, which puts a little pressure on Costco to keep up. Next, we have rising costs. Rising costs are a concern with fuel, labor, and other expenses going up constantly that Costco's already thin margins get squeezed even tighter. Third, we have is our global expansion risk. Like any other company trying to go more global and expand, there's different laws, supply chain challenges, and cultural differences that make international growth quite a bit more complicated and a bit more pricey as well. So, lastly, we have dependence on membership fees. Costco depends heavily on membership fees for profit. If memberships drop or new renewal rates decline, it could hit them bottom line even harder. So while Costco has its strengths and weaknesses, these risk, competition, rising costs, global expansion challenges, and reliance on memberships make investors a little bit more cautious. How Costco can sustain growth. So even with the risks we've talked about in the last slide, Costco does have strategies it can use to become even more successful and keep growing. So first I'm going to be talking about membership fees. Keeping membership fees affordable is very important. Low fees attract new customers while also keeping current members renewing year after year. Second, we have international expansion. Costco can continue to grow internationally by targeting higher demand regions, new stores, and global markets, giving them access to fresh customer bases and more long term revenue. Third, we got e commerce and delivery. Expanding e commerce and delivery is very important, and it will help Costco stay competitive with Amazon and meet the needs of convenience driven shoppers. And I mean, everyone shops online, so keeping e commerce and delivery is very important. So while Costco faces some challenges, focusing on affordable memberships, smart international growth, and stronger e commerce could help them sustain growth moving forward. Thank you for your time, and that concludes our presentation on Costco.